Welcome all small business owners to this informative screencast on petty cash as part of the Australian Small Business Convention. First, you may ask, what is a petty cash fund and why would a business need to establish this fund? Most businesses require that all disbursements of cash are to be monitored and recorded with authorised electronic transfers or double-signed cheques. However, in some circumstances, businesses may require a small amount of cash to quickly pay for items such as postage stamps or extra pens in office supplies. In this instance, it is burdensome for a business to write out individual cheques with little amounts of cash, and so by establishing a petty cash fund, the administrative burden of control is lessened, which removes the need to write these cheques. Therefore, a petty cash fund is where a business keeps a small amount of cash on hand to pay for minor expenditures. Now that you know what and why a petty cash fund is needed, let's explore how a petty cash fund is established. To set up a petty cash fund, a cheque is written for the amount for the fund, the cheque is cashed, and then the cash is placed under the care of a designated employee. To illustrate, suppose a handmade clothing business, Angel Apparel Australia, cashes a $150 cheque to establish a petty cash fund. A journal entry would be required to record this establishment. The business would debit petty cash of $150 and credit cash for $150 with the accounting equation assets equals liabilities plus equity kept in balance. Since the cash has just been transferred to a different account on the assets side, there is no change in total assets as cash has not been dispersed outside the business. To make payments using this fund is simple. Cash can either be taken from the fund to make payments, or employees can seek reimbursement from the fund for payments they personally made. For each payment, receipts and authorisations for use of any cash are to be collected and no journal entries are made, only when the fund is replenished. As the accounting period ends and the petty fund account has decreased, the fund must be replenished. A business must first count the remaining cash in the fund and then a cheque is cashed for the amount that brings the total cash back to the established balance. Now let's go back to the previous business example of Angel Apparel Australia, who now have $30 left over after purchasing sewing needles and spare materials. The petty cash fund would have to be replenished by $120, which the business would cash a cheque for that amount. In this instance, a report will be compiled and the receipts would be used as documentation for recording these expenses. This is shown through Angel Apparel Australia, who had a $75 expense on spare materials and a $45 expense on spare needles. It is clear that the amount of cash needed for replenishment should equal the total amount of receipts. However, in some cases, receipts may not always be obtained or incorrect change will be given. This discrepancy is charged to a cash over insured account, which is a temporary account that can have either a debit or credit balance. This is where a debit balance would increase expenses and a credit balance would decrease expenses. Thank you for watching and enjoy your time at the Australian Small Business Convention.